Hi there, this is Bhumika Patel, and today I'll be going through Noreen Ali's financial plan. So the slide shows the content that I'll be covering, which comprises of Noreen's goal, her net worth statement, cash flow statement, surplus and deficit, emergency reserves, risk management plan, recommendations, points to address, and the importance of risk management and insurance planning. So I'll start by introducing Noreen Ali, who is a 36-year-old single mother to a 5-year-old girl named Eve. She's currently renting a condominium in British Columbia. I'll now go and introduce her goals, starting off with the short-term goals, which she plans to accumulate enough money for a $400,000 house and with an $18,000 down payment within the next 5 years. Her medium-term goal is to set aside sufficient funds for 4 years of secondary education for Eve at $15,000 per year starting in 12 years. Her long-term goal is to retire at age 65 and collect government and employment pensions to meet annual gross income retirement needs of $60,000. $60,000. I'll now go through her net worth statement. Her assets comprise of her savings, which has the checking account of $5,000, a savings account of $8,000, giving us the total savings of $13,000. She also has a vehicle valued at $10,000. Her registered assets consist of the TFSA, which is valued at $30,000. This gives us the total assets of $53,000. Her liabilities consist of the car loan at $8,000, giving us the net worth of $45,000. I'll now go through her cash flow statement, which consists of a salary of $100,000. It gives us a monthly a salary of $8,333. Her outflows consist of the rent of $2,000, condominium fee of $300, heat, electricity, and water of $100,000 each, renter's insurance of $50, car loan payment of $240, car insurance, maintenance, and gas of $100 each, transit pass of $120, food for $800, cell phone bill of $70, TV cable, a home phone for $150, entertainment for $200, Eve's extracurricular activities for $400, and employment deductions for the group insurance valued at $200. This gives us the total outflows of $5,130. And finally, giving us the net cash flow of $3,203. So Noreen's free cash flow is calculated using her monthly salary and deducting it by the monthly expenses, which gives us $3,203.33. So the cash surplus or deficit shows that she has a cash surplus of $3,203.33. I'll now go through the emergency reserves, which consists of the recommended emergency reserves. For 3 months, this would be 14,790. For 6 months, it would be 29,580. The current emergency reserves consists of a savings account at $8,000, a TFSA at $30,000, giving us a total of $48,000. This shows that she has sufficient emergency reserves available to cover her in the event of an emergency. I'll now go through her risk management plan. So a risk management plan is crucial for protecting Noreen's financial goals against unforeseen events. It would include the life insurance to ensure Eve is financially secure in the event of Noreen's death. Additionally, the disability insurance to protect Noreen's income if she becomes unable to work. Health insurance to cover unexpected medical expenses, as well as property insurance to protect her assets, including the planned house and vehicle, are adequately covered. Then liability insurance to protect against potential lawsuits. And finally, the emergency fund to save money to pay for unforeseen expenses. I'll now go through the recommendations for financial improvement. So firstly, this is to increase savings. So taking into account transferring some funds from low interest savings accounts to investments with higher yields. Also allocating part of the monthly surplus to high interest savings or investment accounts to grow her down payment and education funds. Secondly, debt management. So to pay off the car loan faster by reducing the interest expenses. Thirdly, budget review, continuously monitoring and adjusting the budget to maximize savings, as well as examining and potentially reducing discretionary spending to increase savings for goals. Fourthly, investment planning, investing in diversified portfolios for long-term goals like retirement and Eve's education. And next, we have tax planning, which is to utilize tax advantage accounts like the RRSP to reduce taxable income and grow savings. And then finally, we have the emergency fund, which is to raise sufficient funds to cover 3 to 6 months of expenses. So there's a number of points that I'd like to address. Firstly, consisting of the long-term care planning, which is to consider long-term care insurance for potential future needs. To mitigate risk, comprehensive insurance coverage is required. Then we have estate planning, which is to draft a will and designate a guardianship for Eve. Also investment diversification. So potential to optimize investments to achieve higher returns, ensuring investments are diversified to minimize risks. And lastly, emergency savings. So ensuring adequate emergency saving needs to be accounted for. Now I'll go through the importance of risk management and insurance planning. So firstly, we have the to explain the potential risks. This is to illustrate how unforeseen circumstances can jeopardize financial goals. Then we have providing examples, so using real-life scenarios to show the benefits of insurance coverage and risk management. We also have highlighting the security, which is to emphasize peace of mind from being protected. Next, we have the financial impact, which is to show cost effectiveness of insurance in mitigating large unexpected expenses. Next, we have professional advice, which is to recommend consultation with a financial advisor to create a tailored risk management plan. And finally, the significance of savings, which is to demonstrate how savings and investments complement insurance planning to achieve long-term financial security. So to summarize Noreen's financial plan, there's two important topics that were important. Firstly, to implement the recommendations that we suggest. method, as well as to regularly review and adjust the financial plan. This brings us to the end of the presentation. So I thank you for your time and thank you. Bye.